Welcome to the Colorado Real Estate Leaders Podcast, brought to you by Trailstone Insurance Group, bringing you interviews with Colorado's best real estate and mortgage professionals, empowering you to understand the current trends in the housing market so you can make the American dream your reality. Enjoy today's episode.
Well, it's a great day in Colorado, and welcome to the Colorado Real Estate Leaders Podcast. Today we have with us Raymond Woods, who's a loan officer with Fairway Independent Mortgage. Ray, welcome to the program.
Yes, thank you guys for having me. I appreciate the opportunity.
You are welcome. And I always love talking to new people because even if we talk about the same type of topic like real estate, industry, I always love to see perspectives and hear what you have learned and how you have gleaned over your years of experience in the industry. So give us a little bit of your story and your background and what got you into the mortgage industry when you did.
Yeah, so first off, I'm a proud Colorado native, born and raised here, and born right here in Denver.
Nice.
Proud father of three healthy and happy boys. Dedicated husband to the most amazing woman I've ever met. I definitely outkick my coverage with my wife, but she hasn't realized that yet. I'm also a huge hockey fan, and current beer league goalie. So some of you guys might be some hockey fans out there. But anyway,
Avalanche fans.
What's that? I'm sorry.
Avalanche fan.
Oh yeah, big ass fan. Their
Nice.
Stanley Cup season got me to buy season tickets this year, so it's
Very nice.
yeah, to say the least. I'm definitely a huge fan. So, but yeah, so that's a little about my personal side. The reason why I got into mortgage lending, a lot of this has to do with just how my brain works. I've always been, very much like a big math, big numbers guy. It always makes sense, always clicked, right? I started off my career, doing finance and the auto side of things, and I was helping people do auto refinances, and that was a nice career. But the one thing I never liked about it is I always saw people that had pretty significant negative equity immediately after buying their vehicle, and they had a high interest rate, and it was hard to get people out of those high rates sometimes. And after seeing that, I started kind of researching the lending side and research real estate. And I knew my parents have done well through real estate, and I've seen the things that they've done with it, and it's changed their life. And so I ended up getting my mortgage license about 7 years ago. And I really I chose to get it because I wanted to help people. I wanted to teach those secrets of wealth to the average person, the folks that don't think about this stuff every single day. And I'm extremely passionate about helping first-time homebuyers, helping people establish better financial pictures for their family, and then also to building wealth through real estate. So that's kind of the reason why I chose to do what I do and why I love what I do every single day.
And you said you've been in the business for about 7 years. Talk a little bit about some of the recognitions and honors that you've achieved.
Yeah, so luckily I was kind of a go-getter and was able to get established pretty quickly. It's definitely a tough industry, but I was able to find success pretty early on. Last year, I should say, for 2021, I actually was awarded where I was actually finished out the top 1% of originators in Americas. That's one of those
Very
goals
nice.
that I was shooting for.
Yeah.
So not just the cul-de-sac you live in or the small town you live in, all of the United States. That's pretty stellar.
Yep, of active loan originators in America. So yeah, 2021 was a fantastic breakout year, and things have been going great since. I've also been awarded the Rising Star Award through the Denver Post magazine just for production in my first 5 years of originating home loans. And I let that passion for helping folks be that driving force that really just gets me up every single day and makes it where I love what I do, and it makes the job easy.
Yeah, and the key word there is your passion for helping folks, if we could put air quotes around that. Because what I did not hear is my passion for living a rock star lifestyle so I can earn a lot of money. And you know what I'm saying? So when you have that passion for helping people, yeah, you're going to do well, like you've just mentioned, but your priorities are in the right order.
Yes. And that's always been, something that's been a core value, right? Is at the end of the day, people remember how you treat them. They remember the experience that they had with you. And that always takes care of the financing side of it. So, as long as you do right by folks, the rest of it takes care of itself.
Absolutely. One thing that you told us that you specialize in, and I'd like to hear more about, is the first-time home buyers. What do you have going on special there that is enabling you to help folks?
Yeah. So, first-time home buyers are honestly probably the one thing that gives me the most joy out of my job. it's an experience when you go to the closing table where sometimes people are emotional and they're crying, and maybe, they saw this as some sort of unachievable dream. And when they finally get to that pinnacle of actually owning their home, it's for me, it's worth all the hard work, right? And to expand on that, first time home buyers, I think, have some really wrong misconceptions of how hard it is to buy real estate. And that's a couple of things I do want to touch on today. And these are conversations I have on a regular basis, but I think most folks out there think you have to have, 5 to 20% down as far as the down payment goes, stellar credit scores, employment history with no job gaps, or, working the same job for multiple years. And I'm here to tell everyone that's listening today that that's really not true. Believe it or not, here in Colorado, there's some really nice first-time homebuyer programs where I've actually helped clients purchase homes with as little as $1,000 total out of pocket. You could have as low as a 620 credit score. And if your credit score is not at 620, luckily there's ways to improve credit, and there's ways you can almost fix that almost immediately. And then regarding employment, it's one of those things where as long as you have a W-2 job and it's full time, you could have been there for just a month and qualify. Or, if you're self-employed, you've been working that same job for at least 2 years. So it's a lot easier of a task to obtain real estate right now than I think a lot of people think.
Yeah, that's a really huge point, because I think people hear certain words like, whatever the case, buying a home, and they're like, oh, dad told me or grandpa told me, or 20% down to avoid mortgage insurance. And that might be the case, but that's not a requirement. And a first-time home buyer breaking into the market, that's a big nut to crack. But once you get in with some equity buildup and some tax write-offs, it's what a wonderful way to start building for the future. So I'm glad you touched on misconceptions, because that would be a lot of people's worry is, well, I don't have the money. But not that it's guaranteed you can get in for $1,000 down all the time, but you might not need 5 to 10%.
Absolutely. And you know what? I think the big elephant in the room right now too is people think that mortgage rates are high, right? And they've gone up. They've gone up significantly from where they were a couple of years ago. But right now, the real estate market, there's a unique opportunity for these first-time home buyers to get in. And this is the biggest thing I think people are missing right now, and something they should be capitalizing on. And it's very basic principles, right? So like as interest rates go up, you have a less buyer demand, so you're gonna have more available inventory. As interest rates drop, you're gonna have more competition, and you're gonna see home prices increase, right? So you have this unique window of opportunity right now where we do have this higher interest rate environment, and it's not gonna remain high interest rates permanently. But as a first-time home buyer, if you can get in, you can number one, negotiate a nice price on the home right now, but also to negotiate what's called seller concessions and have the sellers actually pay for closing costs and prepaids. And that's one of those techniques that we use on a pretty regular basis to help people get in with as little as that $1,000 total out of pocket that we discussed.
And I would also suggest that if someone is thinking about getting into their first home, don't focus on that rate like you just mentioned, because there's other factors that go into that. And I would say get with a CPA, accountant, financial planner to see what that tax write-off could be. Because when you take a look at that tax write-off at the end of year 1, 2, 3, that could really help defray what the feeling of that interest rate might be. And then you can always come back and say, hey, guess what, Ray? I've heard in the news rates have been kind of coming down. Can we improve on that? So it's not like you're not locked in forever.
Yes. And that's again, the best opportunity that we've seen in a long time for these first time home buyers is taking advantage of the way the market is right now, getting the property that you like. You're going to marry the home. You're going to date the interest rate. You're not going to be locked in that higher interest rate for, the full 30-year term. So it's, again, it's a unique window in time that we do have where if you've been thinking about buying a home and maybe you've just been afraid to take those first steps, right now is the time to do it before we do see these interest rates come back down. Because when they come back down, now you're competing against everybody else that has the money. You have sellers that aren't as willing to give up the seller concessions. So it gets more challenging as those rates come back down.
That's a huge point, is supply and demand. And if you want to get that, those concessions, because those closing costs and the prepaid items, like the first month's payment or homeowner's insurance, all those things that go into the closing, that takes a chunk out. So I think that's a really huge point people need to keep in mind. What about for the first-time home buyer? Like you mentioned, the lower down payment opportunities. I'm sure there's many, many programs and things like that. Do you have any other programs where a first-time home buyer might be, sometimes people don't even realize it's available? Like, oh, you're a school teacher, we have a program for you. Oh, you're a first responder, we have a program for you. Do you have things like that?
100%. Yeah. So we do have the first responder discounts. So, any sort of first responders do get a nice promotion. We have some nice grant programs too, depending on the industry. And as far as the specifics on that, I would just say reach out to me directly. We'll see what programs you qualify for. But the nice thing about where I work is I have the opportunity to broker loans out and find the best possible solution for every single scenario. And again, that goes back to my passion of being creative and finding the right way to make the loan fit, make the loan work to the client's liking.
You bring up an interesting point about broker. So a lot of places that you might see, oh, I can go get a loan at my bank. True. Maybe, and this is not indicative of all banks, but a captured lender like that might have a very limited amount of products. Whereas if you can broker and you're an independent lender, you can find the very best program for the client no matter what they need. And that gives you a lot of flexibility to serve your clients.
Absolutely. Yeah, it makes it where it's a one-stop shop. And that's a really good point. You might have been told no through your bank saying, your debt to income ratios are too high. And that could just be that particular bank's overlay on the actual set government guidelines. Where I'm at, I'm able to work within the actual, federally mandated guidelines when it comes to mortgage and really maximize every single opportunity that comes across my desk.
And when you also think about the type of loan programs, you mentioned seller concessions to help with down payment and things like that. I'm sure that you have at your disposal many, many types of programs, 30-year fixed, 15-year fixed. Are there some top programs that you tend to recommend to your clients when they're a first-time home buyer?
I do. One of the main statewide programs will be CHAFA. It's a nice down payment assistance program. Believe it or not, it's not exclusive to first-time homebuyers either. So you could actually have a current primary residence. Let's just say you added a baby to the family, or your household size grew, and now it's time to maybe upgrade that property. For those particular folks, I do recommend taking a look at renting out that current primary residence, making sure that property cash flows. So now you turn that monthly liability that was costing you money into an asset where you're now producing cash flow. You have your new tenant paying that debt off for you. And then you could actually go buy that next property again using down payment assistance. And again, believe it or not, if we structure the loan the right way and we're able to negotiate some seller concessions, you could technically buy that next primary residence with as low as that $1,000 out of pocket.
Wow.
And really, guys, it's as simple as providing a signed 12-month lease agreement. And once I receive that on the loan side of things, we would then use that gross rental income that you will be receiving to offset the exit property payment, which then frees up your debt to income ratios to go buy that next primary residence. So it's a really great way to do, that Rich Dad, Poor Dad, Robert Kiyosaki book talks about the house hacking technique, but that's basically where you buy a primary residence, you live there for a bit, you refinance it, drop the payment low enough to where it makes sense to rent it out. Then you go get the next house. And if you do that enough times, that's a great strategy to build extreme wealth with no more than just living in a house.
Yeah. I think that's the flip side of, investing in real estate. A lot of times people think, well, I'm living in my house now, I got to go buy an investment property, but you're kind of being mobile and investing as you go. That's a really powerful aha for a lot of people, I'm sure.
100%. And when it comes to the long-term growth on that, let's just say using conservative figures, you have a property that's a current primary residence worth $500,000. It appreciates 2% per year for the next 5 years. That would result in a $50,000 potential equity gain, right, off of just that one property. In comparison, let's just say you have that $500,000 house. It's time to upgrade and get that bigger home. You go buy a $600,000 house. So now you have $1.1 million in total real estate assets that appreciate that same 2% per year for the next 5 years. That would then result in $110,000 in equity gain. So it's that game that the wealthy play. They understand that owning assets is a huge component to gaining wealth, but it's not exclusive to the wealthy. This is something that the everyday person that maybe doesn't have an extreme income or any sort of family support where they have crazy amount of down payment or some sort of trust fund that they were blessed with kind of thing. they can go and become great and build a really big portfolio of real estate pretty quickly, pretty easily.
And that equity gain is powerful. But then, like we mentioned previously, talk to your CPA, your tax advisor, but the benefit of having your primary residence mortgage interest to write off and an investment property, that opens up the door to have another benefit other than, in addition to equity gain, which is some tax write-offs. And that's another benefit of having these properties. So I think a lot of people don't realize all of the kind of like you gain this momentum, like, ooh, and I'm going to pick up this and I'm going to pick up that. Really huge opportunities there.
100%. That's my passion. I've had a couple of clients that they bought their first house with me when I first got in the industry, and since then have bought multiple homes. And one particular borrower comes to mind that bought a house right when he turned 18, and he's actually bought 3 other properties since then, and now we're working on buying a 4-plex for him. So
wow.
It's one of those things where, I know real estate can be intimidating, and it's one of those things where maybe it's, it seems like a big mountain to climb, but you call the right people and have the right team backing you up. It's a lot easier than it may seem.
You mentioned 4-plex. I think that could maybe scare some people, because it's like, I don't want to get the call at midnight, to fix the toilet. Well, then you just call a property management company and have them handle that for you. It takes a little bit out of your cash flow, but at least it takes the headaches out. So I think, the upside of having multifamily 2-person or triplex or 4-plex is huge. And then there's always those things where you can allow, other people to do what they do best and manage the property for you.
100%. That time management component, it's really going to be on a case-by-case basis, depending on how much you want to take on as a property manager. But you're 100% right. You could simply hire a third-party group to take care of all that for you, or if the call comes in, you just direct it to your property management group. Or really, a lot of times they'll just call the property management team directly. You have no idea what's even going on. It's just getting fixed.
That's pretty awesome. By the way,
passive income. Yeah.
Exactly. By the way, we did this for you last week, and you're like, that was awesome. I'm sitting here doing my thing, and my property's earning equity growth and tax write-off, and my property management company is handling the minutia. So that kind of is an empowering feeling.
100%. Gives you that pride of ownership. You get the cash flow, you get the equity gain, you get the tax benefits from it. So there's a reason why my wealthiest clients, they all own lots of real estate, and there's a lot of upside to it. Of course, like any other investment, there's risk tied to it as well. But as long as you play your cards right and do things that are within where you should be, you'll be in a good spot. You always want your home and your real estate to be a blessing in your life and not be something that's hindering you,
100%. Well, it's been so enlightening talking with you, Ray. I really appreciate your approach to the business, how you serve your clients, and it's been a real pleasure. So if someone is listening to this and would like to reach out and learn more and connect with you, what's the best way they can do that?
Yeah, just give me a phone call. My number is 303-596-0046. And once again, this is Ray Woods with Fairway Independent Mortgage, and my number is 303-596-0046.
Ray, thanks a million for coming on. It was a real pleasure talking with you today.
Right on. Well, thank you, Mike. Thank you, Mark. It was a pleasure. You guys have a fantastic rest of your day.
Thank you, Ray. You take care.
Thanks so much.
Thank you for listening to the Colorado Real Estate Leaders Podcast, brought to you by Trailstone Insurance Group. To learn more about the topics mentioned on today's show or listen to past episodes, visit www.coloradorealestateleaders.com.